Welcome to Big Picture Trading. All right, guys, welcome back to another episode of Chart Talk, where we go over the major markets, major sectors, and top ideas for the week ahead. So, jumping right into things, we got the Qs today gapping up and retesting the prior all-time high from last week or a week or two, about a week or two ago. We had that all-time high going into that Friday. We had that, tariff news with Trump with China, sent the market tumbling 2% down, and we've since fully reversed that move, and we are now retesting the prior all-time high. So if we zoom out and we look at the Qs, still in this breakout stage, still in this very clear channel. And like we have written right here, we don't want to fight the trend. So as we zoom in a little bit closer, we just see more of a flag starting to form here. So this is the all-time high. Here's the retest. Again, this area is often met with resistance. Given how the market has been trading recently, maybe we do get some continuation into tomorrow. We see a new all-time high. But this typically is usually the area where sellers come into play. So we'll see how that transpires over this weekend. Still within this channel. Maybe we get another push tomorrow. Maybe we fade back into this range. But as long as we stay above this level, above this 590, as long as we do not break below this, anything in between here is just no big deal. It's normal price discovery, 612, 620, 600, anything in this area, just stay the course. It's really, this is the key out. If we ever see, or when we see, a break and close below 590, this area right here, this will be the time when you want to raise cash on the active side of things. Until then, path of least resistance is higher. So moving on, we have the S&P. Again, it seemed like we were starting to go into these lines here or a potential breakdown stage. Again, we had this very bearish action 2 Fridays ago, kind of choppy action. We saw this mini resistance area, and maybe we were expecting this breakout stage if we saw this break. Now, we broke to the upside today, so it's not really relevant anymore. We can kind of forget about this breakdown stage. The market is showing us otherwise, but same thing like with the Qs. When this line breaks, this is 652, we're going to say 650 just to keep it like easier whole numbers. But when 650 breaks to the downside and closes below, that's when we should see that breakdown stage. We should see much broader weakness, like what we saw with most of the sectors last week. It was a very weak week last week. Financials, for example, looked horrible, which we'll get into in a moment, which led to this thought of, if we break this area, expect lower price action. But today, we'll see. We had a nice little gap up. Typically, Monday morning gap ups are not really the things you want to buy. In this case, exception to the rule here. And really, we're seeing what could be a new flag here in this 20-point range. So if we do retest these highs, which, it's not really saying much here, by tomorrow, maybe we flag out and eventually, you have a measure move to about 700 in the SPY. This is going to be the next big psychological level of resistance. It's going to be this 700. And given this 20-point flag, measure move is about $20 higher, you're pretty much within striking distance of that number. So for now, market looks good. But if this area gets taken out to the downside, proceed with caution. And again, it'll take a couple days to see that if that were to be the case. Big thing right now really is gold. Welcome to Big Picture Trading. We aim to teach you how to successfully swing trade in the markets while working 9 to 5. We've put together a program that we can teach you over a decade's worth of knowledge over the next 60 days at no cost. Sometimes something like this can happen. Now, obviously, we don't plan to crash or invest, but the reality is we know what you're doing, that can happen. If you'd like to learn more of how we can help you avoid mistakes like this one here, simply click the link below, schedule a call, and we'll be happy to help. Again, these things are increasing in value like hotcakes. It's, pretty insane the move that's been going on. Again, we're definitely at like the mania phase here. You're seeing a lot of the pictures on social media of people lining up around the block at, gold jewelry stores to pick up, bullion. So when you're seeing the largest, you know, 2 weeks ago was the largest buying that we saw, and then last week was even more. This is mania. There was a Zero Hedge article that they were talking about banks buying up gold very quietly, and that was earlier in 2024, basically a blip on the radar that it's now 100% higher. So this was, I don't have the Zero Hedge article in this video, but pretty much right around here was when banks were buying gold, leading, running up into this macro breakout. And now you have what we refer to as dumb money chasing it after it's gone up 100% with back to back the largest, volume weeks it's had as far as you can really go back here. We're going back, we're back 10 years now. And the last 2 weeks was the most buying that we've seen in gold after the 100% run up. So there's typically only one way this goes. In the short term, it'll push higher, but this is not the time to chase. This is probably the craziest 5 EMA trail on a weekly that I've ever seen. There's only so much more vertical that this price action can go. Eventually, there has to be a reversion to the mean. And when you have the crowd coming in here, you should see these bars on the downside, and that's when it gets very costly. So if you're in gold, amazing. Again, this thing probably doubled in value in the last year just based off the gold that's in it. But if you're buying it here, Godspeed, because this typically just ends, one way, and it's not the way you want it to be. Again, we got rates still fading lower. We should eventually see this break of 3.8 in the 10-year, and then you'll see that fade most likely by, again, these rates move super slow. Even if we get back down to this 3.8, probably still going to have a balance before it really breaks down, but we should touch this trend line at some point. For those trying to buy a mortgage, if you're looking out the next 8 months to a year, mortgage rates should only come down. Again, they come down very, very slow. Do not expect 3% rates ever again. Don't really even expect 4% in the next year, but realistically, 5% is going to be like the floor for mortgage rates over the next 12 months. So if you're in the market for a mortgage, be a little patient. Again, dollar's been kind of basing out here. Again, for the stock market, we want to see a weak dollar. This is great for stocks. Weak dollar, strong dollar, not so good. And a basing dollar, kind of, it is what it is. But, broadly, a little base here. Not really. We don't really want to see this base break to the upside, but time will tell. Again, put to call ratio, really nothing to talk about here. We kind of had some of those alerts last week. The market was at highs to take some profits, but no biggie. And VIX has just kind of fallen off the map as the markets climb right back to all-time highs. It's as if nothing changed. This isn't going to be some dramatic dip or correction or bear market, which we've been highlighting that in the last few newsletters and chart talks, where the market isn't going to crash again on tariffs. COVID happened, market crashed. The next COVID wasn't going to crash the market again. The new scary thing was tariffs. Tariff crashed the market. It's not going to crash it again. It has whatever the next thing is going to be that's going to cause the market to enter a technical bear market will be something that no one is thinking about. Maybe it's a crash in gold. I have no idea. But whatever the next crash is, it is not going to be what the preceding crash's fear was. So the tariffs, there's going to be some short-term volatility like we saw, but it's not going to really have legs to do what it did the last time. So we're seeing the VIX fade. Again, semis have been really battling out with this key, moat trend line here, mother of all resistance trend line. Again, we know the key out. I don't really see the semis really pushing through this area. It reminds me very much so of what we saw, kind of last summer. You had I'm going to zoom in a little bit more here just to kind of show the price action. I'm going to get rid of the volume here. It's a little bit easier to follow along. So you had an amazing run up in semis, nearly almost to the T, about 100% run up, puts in a high, pulls back in, just ticks that new high again, gets smoked. And what are we seeing today? 180 to 360. Again, 100% move, like to the percent. This prior run up is 99% of run up off lows. This is 100% up, 100% run up off of lows, shy by 10 points or so. And it's getting that resistance again. We saw that high 2 weeks ago. We saw it got sold off, just like we saw this high get sold off. A little bit of pull in, ticks new highs, gets smoked. Same stuff here. We're kind of like this little doji weekly candle. We're not at the smoked part yet. Now, as I'm saying that, I was buying NVIDIA today, and maybe it doesn't repeat itself again. And if it doesn't, this NVIDIA, if semis are going to go and that resistance area is going to break for whatever reason, NVIDIA is going to have to play ball. It's the biggest semi in the space, even though AMD kind of, is like the new charmer right now because of that big gap up on earnings. NVIDIA still is the king. So what we see with NVIDIA is we were looking at this blue sky breakout all summer. We got that blue sky breakout, but we didn't get the real follow through, which not the craziest sign, not the craziest thing to see. We see this with breakouts all the time. You get that initial breakout, it fades back into the range. We forget about it, and then it goes. And a recent example, sector-wise, we saw this with healthcare. So again, healthcare is obviously not semiconductors, but we were keeping an eye on this base in healthcare, and we were expecting this big breakout here. We didn't get it. It wasn't ready. Kind of fade back in the range, chops around, and then eventually you get that explosive move. So this is where NVIDIA feels chart-wise. It has that technical resistance area, 184. It broke it. It pushed up a couple dollars higher, but it's back in that range under 184, and maybe it's gearing up for this. No, again, not this vertical move, but the idea of the real follow-through move could be coming. And if, for whatever reason, semiconductor sector is doing something differently than it did last summer, this is going to be the name that's going to make or break that breakout. So right now, no one's really talking about NVIDIA. Everyone cares about, AMD right now. And we had this little pull in, tight little range. And if it's going to break back up, again, we're not even thinking of this 198 area. It's, 200 plus or higher. Could sneak back into NVIDIA on very tight risk. Buying 184, 185 versus 180, very tight risk if semis, for some reason, want to break the resistance area. If they don't, and history is going to repeat itself like it did last summer, I have no problem risking $4 in, the biggest stock in the stock market. If it's going to go higher, I'm involved. I'm not, and this is the top. I'll take that tiny loss any day of the week. So semis, definitely keeping a big focus on. Again, utilities have been, the key sign that the market has had this kind of flight to safety as utilities have been hitting new all-time highs. They're, one of the few sectors that have been doing that in the last couple of weeks. Not the best sign we want to see, but if we see some fade in utilities, good sign for the market to continue to climb higher. We don't want to see utilities breaking out. Again, healthcare, we can see this bigger base that was forming. Again, this is a weekly chart here. And now we have the next flag forming to break this even bigger base down the road. So again, for healthcare, looks very strong, looks good, just needs to battle with this area up here. And the sector just came a long way very quickly. It's going to take some time to flag out. So very strong, but don't expect fireworks from it just yet. It's, it's in a temporary hibernation as it flags. Biotech's been on fire, breaking right to that major resistance level. Looks great. Great for those that are still in any of those names in that sector. Tech, still in the breakout stage. don't fight the trend. Industrial's nice flag forming. Industrial's looking, very strong for that blue sky breakout. And then we got consumer staples. We've been keeping an eye and focusing on the staples the last 2 weeks as the market was cooling off. The sector had already pulled into macro support. We're looking at names like Walmart, names like Coca-Cola, names like Anheuser-Busch. If you're a beer fan, we were looking at a lot of those consumer staples last week as they were breaking out off of support on very tight risk when we were seeing weakness in some of the other sectors. Financials were getting destroyed last week and the week prior. And just like we saw with semis had that same run up last summer, we're seeing that run up today. Financials we saw, or we are seeing, the same kind of breakdown that we saw last year. Financials were at highs, nice flag at highs for multiple weeks, breaks down, bounces, breaks further, very clear breakdown stage. And as of late, seeing the same thing. Financials were flagging at highs for months, looked honestly very good. And they've since started to break down. And it's not just the big banks, it's not just regional banks, it's not just insurance companies or hedge funds, it's across the board. Financial names are just getting really beaten up. So this is definitely a sector to avoid. Energy has been kind of chopping around. Also, a bit of an avoid. And consumer discretionaries just still setting up. So really the big focus sector-wise, keeping a very close eye on the semis, keeping a close eye on consumer staples, or if they want to continue this run up back into resistance, and really avoiding financials right now at all costs. They're in this breakdown stage, much easier to avoid them. Now moving on to a couple of key names that are on the radar. Again, we have this Roku that we're zooming out here. Again, this is going to be a weekly chart. This is showing the last 4 years of trading for Roku has not been able to break above this 105, going back many, many years now. And again, this is a very macro pattern. This is a name where you want to have those alerts set. Again, the real range in this name is really $25 here. You got a big range. Excuse me. So not when you want to hawk every day. Just keep those alerts set. I have alerts set down at major short-term support and all, of course, the 104, 105 breakout level, but not really a base you want to miss. Given this range, realistically, when we can see a break and close above 104, really this should be a pretty quick move back to at least 150. So it's a 50% move higher from the breakout area when the name is ready. So you don't want to, chase these again. If you think of even Baba, this name based out, same thing, many years here. And once it started to get going, it wasn't this like clear, it goes and it's gone. But once it starts to really break above that resistance level is when it really starts to set back up. And then it finally goes. So you can even see here, you got a 100% move, you got another 100% move. These are the moves you want to see out of these macro breakouts, but it's often much easier just to wait for these times than to try to get in early. Because when you get in early, it just pushes you out. It takes much longer than we expect. But when you just wait for the actual levels when they're going to break, it tends to be much, much easier. So again, this PLTR has been probably the name I've been asked about the most from newer traders and more so people trying to buy it up here. Very, I don't want to say it's similar to the gold move because the gold's only gone up really 100%, but this PLTR has gone up an insane amount this year, nearly 1,000%. These are pretty bubbly moves within a year. It's very hard for these moves to really sustain themselves, but when stocks are at blue sky areas, meaning they're at all-time highs, you never know. Maybe this name still has a run to 250, 300, or 400 before it's really that mania phase. And we really haven't seen the mania phase in most names other than really gold right now. So if this isn't the top in PLTR, as it continues to flag out here on a very tight, weekly ranges here, usually when it gets very bubbly, you get that parabolic run up and you get that blow off top. You don't really get tops when it's, a tight flag that's been forming for many weeks. So with that being said, even though this name is extremely extended, given the percent it's ran up this year, it's still flagging out here. And maybe the next earning catalyst can push it through this 190. And if so, who's to say why I can't go to 220 or 225? So still keep an eye on it, but cautiously optimistic there. This IDXX, I'm going to switch over to a daily. Gaps up on earnings and just been basing out for months now. Can't really sell off, can't really break out, but it's in this very tight base. Eventually, one or two things has to happen. It has to break up or has to break down. It has to have one of these two occurrences, and it's getting very tight here. So keeping it on 650 for that base break. And this run back to retest is kind of insignificant, but would be expecting that run up similar to like that MEDP earlier. We had a nice little buying it through this, this base buyback like we see in IDXX. Again, didn't consolidate or base out as long, but we got that nice 3-day move. For us, it was just a quick day trade or a quick swing trade. We took the profits into that 3-day run up, but you can see since then, never saw that price point again. So this IDXX been setting up for way longer, much, spent much more time in this base here. So keep an eye on that 650, that 660. Once it really can push out through here, this prior time high really isn't that significant. You could expect that move, to 700 plus in time. Again, we've been talking about these consumer staples being, somewhat in play recently with some of the weakness we saw last week. This CASY, Casey General Stores, Blue Sky Breakout, very textbook bull flag pattern. Really can't ask for more here as it continues to tighten up. Buyers keep stepping up here and just want to keep an eye on that break and close above 570. Right now it's 20 points risk, $500 name. It's really not that much. So getting tight. Definitely keep a close on this one. Next up, we have this Roblox. I'm going to zoom out to a weekly here. So again, this is just kind of a good example with what we tend to see. Again, Roblox really isn't a new issue IPO. It's been out for a couple of years, but with new issues, you tend to see, this initial move in the beginning. You get that pretend this is the day of IPOs, gets that big pop, and then you get years where it sells off and bases out and just sucks. But now that it's back up at highs and now it's flagging, these IPO high setups where once it can break and clear above this 140, path of least resistance is much, much higher. So this is like that Roku example, like waiting for the confirmation of the base of the break of the base of 105. Same thing here. We want to see that break of 140 and close above it to have that confirmation of that breakout, and the path of least resistance should drift its way much closer to 200 than it's going to drift its way back down to 100. So this one again will probably still need some time. Again, this is still a weekly chart, and we can see it's been consolidating, but still a bit wide. As tight as it looks on a weekly, still a 20-point range. It still is no walk in the park buying 140 and forgetting about it. But if it can continue to tighten up here, looks great down the road. Next up, we have this ERJ. Again, textbook breakout through this 62. Again, you can see, pretty textbook flag here. I'll zoom in. Very textbook consolidation. But again, we don't want to get this versus 56. We can see that versus like 58 area. It's been consolidating much more tight versus that area. So very much keeping an eye on this EGR as well. So current names that I'm in, still in Tesla. Again, has earnings on Wednesday. Again, for those who don't know how we treat earnings, for the most part, earnings when it comes to swing traders always in a void. We don't hold stocks into earnings unless we have a 20% cushion in the name. So if we're up 20% in Tesla, we're okay with holding it. Doesn't mean you have to, but there's enough of a cushion that if they somehow have a horrible earnings announcement and the name gaps down for whatever reason, it's probably not going to gap down 20%. So there's enough of a cushion there to protect ourselves if the trade is going to fail. And at that point, we know our out is 360. For me, that's a break-even trade. If I have to give back 20%, it is what it is. If it now gaps up, it's a hold. You got to, if you're going to roll the dice into earnings, you don't want to get into the camp of if it gaps up, I'm going to sell it. Because if it gaps up, it's more than likely going to, now the first day it might sell off, but if it gaps up over the next quarter, it should settle out after the first couple of weeks, start to flag out, and then set up for that next run. So if Tesla does gap up, for me, it's a hold. If it gaps down, as long as it doesn't get near 360, I'll still stick with it. But really the thinking is if you're going into anything and you're holding it for earnings, for better, think marriage, think holding it longer term. And if it's for worse, look for the exit closest to your price point. So we'll be holding Tesla through earnings because we have the 20% cushion. It just passes that test. Budweiser, again, we've been talking about consumer staples, and we bought through this base break last week. Nice little pop higher since. Took a little bit of profits today. The only reason I took profits was to free up some cash to have it ready to buy NVIDIA. Other than that, I would have just stuck with it still, but took a little 10% profit. Again, looking for the initial move of this retest back to this 64 area. This is going to be a 4-to-1 risk reward. This little profit taking was 2-to-1. No big deal. Just, some locking in some gains there. Again, we rotated some of the profits and capital out of Bud. We put it into NVIDIA today as it tried to push back up to the breakout level. Again, pretty much an insignificant close today. If it rolls over and breaks 180 tomorrow, don't care. We'll take the 4-point loss in it, or 2% to be involved in one of the strongest names. I also got out of this shell to free up cash to, again, add more to NVIDIA. So over the past few weeks, we've been trying to buy this shell off of support. If we zoom out, this shell has a massive breakout level through this 74 going back more than 10 years. Shell has not traded above $75 a share since 2015. So it's been nearly a decade since it's seen that price level. When it gets above that level, name really should wake up. And we've been, the name has not been able to break 70. There's clearly been a buyer in this 71 area. So we've been buying up off of support in the 71 area to be prepared for that 75 breakout. But again, this is a 10-year pattern that's been developing. I don't need to sit in this name for the next 6 months until it goes. Again, a week or two ago, it felt like it was going to go. It was breaking out pretty strongly, but there was clearly still a sell there. So I don't need to sit in this name. I don't need to sit with it for the next 6 months or however long it's going to take. I'd rather free up the money, take the marginal, $1.50 per share gain, put it back in NVIDIA that is a little bit closer to a potential breakout. And when this name gets back up to 75, I'll have no problem buying it back. So just some rotation today of selling some Budweiser, getting out of Shell, putting that money into NVIDIA because this is just super tight, little baby flag here under the breakout level. If this was the top, this was the all-time top in NVIDIA, top of all tops. People are going to be panicking out here, and you're going to see more of these candles coming back in. You're going to see, NVIDIA getting close to the major support area in this flag. Just like we're talking about the S&P and the Qs, very clear place to get out. Even Oklo, another kind of a bubbly name. This was to clear out during the last pull-in, and it's kind of tickling this support area. Down here, it couldn't test this low. Pulled in, buyers are strong. Now it's, you know, day to take notice here. And now it's starting to pull in a little bit. And if this sells off hard tomorrow, expect that weakness to continue. But we're not seeing that with NVIDIA. It put an all-time high, broke out, blue sky high, blue sky breakout, breaks out, has that crappy day when the market sold off, but just kind of hold out up here. It's not pulling back much more significantly into this range, which says, okay, if it wants to hold up here and it doesn't want to sell off, it's only one other thing it really can do. So no issue with this kind of rebalancing here. And we'll see. Worst case, lose a percent or two. We got some alerts from the last week or two. ALNY, we had that nice little breakout through that 460. It's grinding higher. We have this 5 reward target up here at 500. We got that Oklo alert through those all-time highs through for the 147 area. Again, ripped 40 points. Even at NAV again stopped out. It's still a great trade. MLM is coming back to the breakout area again, like NVIDIA, breaks out, has that initial run, not quite ready just yet. And now it's when it kind of pulls back in, and that's when that potential sneaky buyback can form. And that's when it name breaks out, comes back into that breakout level. Traders typically forget about the name, can't really break down. It breaks back out, and you don't think about this prior high. Your thoughts are it pulls in, it breaks back out, and then it's really off to the races. So that's sneaky buyback setup that we keep close on. Again, this GLW through 66, up $20 since, this was kind of the day we were taking notice in this alert. If you're still in it, again, very clear area to get out. We're seeing some lower highs, probably a little bit of a topping pattern up here. And then lastly is KNSA. And we bought that flag, and we've just seen flag after flag continue to form. And again, key out really is this 37 area. So some alerts have been working very nicely. Some broad names that look very good moving forward into the week ahead. And then we have a couple names members we're looking at or in from last week. Again, Walmart, consumer staples, very strong, breaking out here. If you're already in it, I know Abby was buying into this 105. It still looks good, but again, it's tough when you're buying these things through the breakout areas because Walmart's not going to really have these explosive moves. You really need to get really good stock off support. So for now, you have a stop versus 107. Probably shakes you out, but probably has to pull back in before we really see a move to like 120. SoFi is a perfect example of these IPO high setups. So SoFi has the initial run up, gets smoked for years. Again, this is 2022 to 2024 penny stock. This is why with these recent IPOs, you don't really want to be rushing into these names because they have years, half a decade of it sucking before the name finally starts to wake up. So we're still seeing it trying to really clear these all-time highs. Again, this is the best risk reward setup in an IPO or recent IPO name is through these highs years later. But again, it's still wide. 25 versus 30, you still got a decent amount of range there. But when it can tighten up and you can find a really tight entry and it can really clear that 30 with some momentum, the name's going to be gone. So just want to keep a close eye on this one. Again, China is finally back in vogue. And this EDU, we've been talking about this base break a couple weeks now, finally broke out. And now you just got to give it the time, really give it versus like 51 and give it the time to really get going. This is just when the base is starting. So where it kind of is choppy. It's not going to be clean. You just got to give it the right room and give it time. AMD here pushing to those highs. For those who held it through that announcement, congrats. Stick with it. 200 really is the key out here. Anything above it, all good price action. BK was a name our one of our members was contemplating this decision of selling. Still seems to be the case that getting out of this name, especially with the weakness in financials, was smart at that time and continues to be smart. And we'll skim through a couple of these, see if anything's setting up. Again, BE, we have a few members. I think Abby and Raheem are still in this. You had the breakout through 30, all-time high. We're given these examples of all-time high breakouts. Again, this is obviously not a recent IPO. It's been out for more than a decade, but all-time high breakout. This is like the best. If there's one chart you can master or one pattern you focus on, it is the all-time high breakout of any name. This name took 5 years to get back to all-time highs. Once it broke 40, 200% plus move. Couldn't mess that trade up if you tried. So we have some members that are still in it. Again, thing doubled in a couple months. It's when you want to take, ring the register a bit, lock in at least half, make the rest of, the trade, house money. But congrats to Abby and Raheem in that trade. What else we got? Zoom, nothing special. Silver. Again, we had people asking last week about if they should buy silver to play catch up with gold. You never buy, you never buy the football jersey of the guy who lost Super Bowl. You always care about who wins. Gold is the winner. Silver is always in second place. Gold is at new all-time highs. Silver is simply retesting all-time highs from 15 years ago. So you're seeing all the hype about gold. You're seeing all the hype about silver. Gold is up 100% this year. That's great for gold. Stocks go up 100% in a month or two. So don't let this move make you feel like you're missing out on a whole lot because that's only 100%. If you were an investor in silver for the last 15 years, this thing you're barely at new all-time highs. So, just what the headline says doesn't always make it to be this amazing investment. An investment in silver was, underperforming for the last decade. And only just the last 3 weeks or 4 weeks has it done anything important in 15 years. So don't let 15 years of pain, make you feel like you're missing out on, 4 months of getting back to even. So let's move on. We got net looking just like the silver chart, retesting its all-time highs. But again, a stock retesting versus silver, way different from a price action standpoint. So it's good to see this net back up here. And we wanted to see that close to that 220 area, about 10% range right now. Definitely want to keep on the radar. A couple other ones. We have this MDB, another one of Abby's ideas. Nice little flag forming. Looks all right. Definitely see what she's looking at there. But middle of its overall range, it's going to have a lot of overhead resistance it's going to be battling with. So there's probably some better charts there, but definitely see the setup. And then Goldman, again, financials have been in a void. All these financial names have had an amazingly easy run off those April lows pretty much until the start of September, or let's say start of October. So they had an amazing 4, 5, 6 month run. Now is when the harder action's coming into play. You want to buy when you're seeing higher highs and higher lows. When you're seeing lower highs and lower lows, just avoid it. This is the chop. This is the pain. Let me make this red. This is the annoying trading. This is when you're fighting for that move back to highs. This is the move where you're like, how high can it go? It's a much easier game to focus on this of how high can it go than it put in the high, can it get back there? So even in some of these bubblier names, PLTR, OCLO, probably more OCLO than PLTR. It's still in the camp of where can it go? How high can it go? This is crazy. This is insane. Gold, same thing. How high can it go? As crazy it is to buy these things, which I hope no one is doing right now. you're going to get bailed out much quicker in these crazier setups than in the names that have already put in their short-term high and are now pulling back in. So it's a much different game here. It's a game you're not forced to play. It's a game I don't play at all. I want the easiest charts, path of least resistance, tightest risk. I don't need to be here and buy the low in Goldman and sell it back at the retest to say I did it. I just want to make money and risk as little as possible. So really keeping a close eye on NVIDIA over the next week. See if it can get back above this breakout level. If it can, maybe somehow semis continue to break out, even though they're at macro resistance. If it can't break out, it continues to roll over. Writing's kind of on the wall there with the semi sector. But really, the safe haven spot right now is consumer staples. Whether the market continues to act weak and the rest of the market kind of pulls in, staples will do fine. And very tight risk in a lot of these setups. These aren't going to be crazy names where you're getting demolished if you're wrong. Walmart, you buy Walmart today and you forget about it. Worst case, you're down 5% in a week or two, where names like Oklo, that could be a 5% move in 15 minutes on nothing. So being, somewhat cautious, but the market for now is, kind of still in, the cues are still in that breakout stage. So until we really see this break of 590 in the cues or 650 in the SPY, it's all fair price action. So if you guys have any top ideas or questions, just post them in the chat. Thank you guys for tuning in. Hopefully my head isn't like oversized like it was last week with the chart talk. And we have Friendsgiving like we had last year coming up in a couple of weeks. I'll be sending out some invites to the people in the Tri-State area. Again, if anyone else wants to make the trek over to North Jersey, you're more than welcome, but I'll post all the details in the group. I'll send out an email or two with the dates and address, things like that. And hopefully I'll see you guys, here in a couple of weeks. Take care. God, taxes are so stressful. 1099s, brokerage statements. I don't even know what that is. Oh, God. I gotta figure this out. I'm not gonna read this. If only I knew someone who did taxes. It's getting a man, I'm stressed. I got 1099s, got brokerage statements. I got a menu from a Chinese food restaurant. I don't know what to do with that, but you gotta help me out, buddy.
Let me take a look. This is what you're worried about?
Stressed.
We'll handle this.
Thank God. What's it gonna cost me?
How much you make last year?
200 grand.
20% of that.
Oh God.
I'm kidding.
Now, obviously, we're not gonna charge you 20%, but everyone's tax situation is different. So what we recommend is for you to email us a copy of your most recent tax return, and then my partner Scanner here is going to do a review of your tax return and educate you on the possible tax credits you could take advantage of in the new year. Once we've done that, then we can give you an accurate quote of what we feel it will cost to properly prepare your tax return in the new year. Welcome to Tax Experts. My name is Bennett. This is my partner Skender. Throughout the year, I'll be your main point of contact, helping you organize and collect your tax documents for the new year. Once we've collected all of them, I'll be passing you over to my partner Skender,
where I'll be preparing your income tax returns and working with you to maximize your deductions and credits for the year, and also offer planning services for years to come.